Guys, long ago, there were 4 parts of normal fundamental analysis. For GME in particular, it was the fundamentals, the volume, the shorts, and the options. But ever since it suddenly started to feel disconnected from the actual world, it has never been the same again. This is something that I want to be able to cover with you guys right now. There are multiple fundamental market disconnects in GME, what we saw this week. If you guys like this video, drop a like on it. We're gonna skip right through and not skip a beat, so that's why we want to focus up, watch to the end, and learn a thing or two. Morning Apes, the main stomping ground over on Wall Street Bets New, is getting hot bombed at the moment, so I hope that you don't mind me sliding in here for a quick post. So let's understand exactly what we saw this week, the week prior to leading up to the the quadruple witching day. Part 1, the shorts. We are currently in a complete market disconnect when dealing with GME short shares. In this graph, you will see the correlation between the red fee line and the blue bars showing the available shares to borrow. Let's look at this real quick. Oh, so this one thing is that I have a hard time showing charts when the table is here. So what I'm going to do is hopefully I'm going to be able to zoom out a little bit. Well, no. So let's just focus up right there, right? So the red line here is the fee line, and the blue bars are showing the available shares to borrow. So the fee line goes up a ton, and when the available shorts is low. However, this is starting to this made sense back in April, and it's starting to feel disconnected more and more as we go on to 2021. As the bars get smaller, the line gets higher. As the shares get harder to borrow, the fee increases. Simple business acumen. So why isn't it doing that for the last few weeks? I monitor the shorts on various platforms constantly, and on Friday, they saw available short borrow shares on IBD fluctuate in the hundreds for the first time since we pulled back at $40. So once again, that relationship, it needs to have a higher fee for the fewer amount of shares that there are left to borrow. This is the fundamental math of supply and demand, and especially how regulations are supposed to work here. iBorrow Desk is supposed to be able to give us that information with this link right here. So let's say this again. Between 2 p.m. and 4 p.m. on Friday, 19th of March, 2021, there were less than 1,000 shares available to borrow to short on IBD. So maximum shares to borrow has not increased on IBD since March 17th. On March 17th, there was a total available share count of 600,000. Normally, as shares get lent out, the numbers gradually replenish themselves as shares are covered and new shares are located to borrow. Right? Remember, if you guys haven't turned off your margin account to turn off lending, active lending to people who aren't even going to pay you to lend out your shares, make sure that you do that. But this is how the iBorrow Desk replenishes its shares. Either shares get covered or new shares are located to borrow. For example, on 3/15, the day began with 250,000 available. It dropped to 100,000 at 12:45 before being replenished to at 1:30 back to 250,000. The end of the day with 150,000 available, and the next day on March 16th, they had replenished up to 400,000. Simple, linear, regular. 10 a.m. on March 17th, 2021 was the last time any services has been replenished on IBD. The available to borrow share count has only gone down since that time, and there has been 0 meaningful replenishment. They couldn't even find 1,000 actual shares to borrow on Friday. But if shares are so hard to locate right now, why hasn't the borrow fee increased? Well, that isn't even a rhetorical question. I'm legit asking out there, how does the price to borrow decrease on a day when shares aren't able to be found, and after 2 steady days of not being able to locate new shares to lend, right? If there is a huge lack of water, suddenly the fee for water, the price of water isn't going to go down. That is not supposed to happen. So what is going on? What is this disconnect, and how does this relate to what is going on this week? Who thinks that's a good bet? Who lends such a highly volatile stock as GME with no available shares to locate at 0.5%? Someone is purposely trying to make shorting GME a cheap bet. I think someone just wants to watch the world burn, but they are selling gasoline at 0.5%. There you go. Part 1B. How does IBD show only show borrowable shares in the thousands, but Fintel shows daily short numbers at 6,400,000 shares shorted for a total of 26% of the total daily trading volume? We talked about this in a previous video about how FINRA data could be leading into Fintel and making the whole shebang inaccurate based on either a miscalculation, trouble in the data pipeline, or something more sinister. Yes, I realize that IBD only shows a couple of brokers, but it is updated every 15 minutes and doesn't show cumulative count. There's a big difference in the information we're given by these two entities. IBD shows that broker hasn't replenished any shares in 3 days, while Fintel is showing 6,400,000 shorted shares in a single day. Where the heck are these shares being borrowed from? Or are they just being created by a market maker to sell themselves? They're leaning towards a bona fide market maker is creating these shorts for themselves. Without having to go to market to locate the borrow, I'm going to make a separate post about this later. So that's number one. What is happening with the fee it costs to borrow these shares? Shouldn't be this low, especially since it's getting harder and harder to locate them. Number 2, the fundamentals. Book 2, the fundamentals. Welcome to season 2. Why does the market even care about the value of GameStop is at? Again, this isn't a rhetorical question. I'm legit curious about why anyone cares if we think GameStop is worth $0 or $1 million a share. The entire premise of free and fair market is that the buyer and seller set the price. Anything else is irrelevant. But is it really irrelevant? At $200 per share, GameStop has a $14 billion market cap. That's less than 3x revenue based on previous sales, and sales are about to boom. Every single dollar over the previous revenue that they earn on this upcoming report is just a higher valuation for the stock to naturally sit at. And that's because the company is worth $200 a share, not squoze, not popped up by short hedgies buying shares. It's worth $200 per share based on fundamentals alone. So there's that fundamental analysis right there. Stocks tend to be forward-looking by 6 to 18 months. I think this earnings report is going to paint a really bright picture for the 18-month future of GameStop, which we're going to be live streaming or likely have already live streamed later today. Everyone keeps saying how brick and mortar is dead, but every GameStop location is currently profitable. It isn't about rotating out of brick and mortar into online only. Their physical locations are already generating money and brand recognition. It's just about revenue expansion, cost cutting, and streamlining. Speaking of which, we talked about the entire customer journey in a previous video, so go and check that out. It's about how Ryan Cohen has a dream, a vision for how GameStop should treat its customers. In the original DD back when GME was $100, I told you how I felt that this quarter's earnings is going to smoke expectations. Haven't changed my stance. For instance, just think about the tailwind of Magic the Gathering and Pokemon this year. Just wait until you hear about what the trading card sales have done for their bottom line on the earnings call this week. Ryan, if you're reading this, Ryan, if you're watching this, and you guys don't have anything in your presentation planned to touch on the expansion of your footprint in the trading card sector, this is your wake-up call. Ryan, put it in there. It's going to be a huge revenue stream for you if you treat it correctly. You need to get it up your butt on the phone with Papa, Hasbro, Nintendo, and set up a direct distribution model to turn GameStops into mini Pokemarts and MTG centers for people to buy product at, and start selling booster boxes for FS. Okay, booster boxes is what got me a ton. They just got me every time I went to the grocery store as a kid. And if you guys feel the same, scissors in the chat, ladies and gentlemen, scissors in the comments below if you could not resist those booster boxes as a kid. GameStop has revenue streams that they haven't even begun to tap into yet. Management has not done well for years and failed to innovate. The potential in GameStop is massive. It just wasn't being utilized. The brand recognition and multinational footprint alone is valuable. Look at it this way. NKLA is a scam. Claims to have over 300 employees, produce $95,000 in annual revenue, and the market cap of $6 billion. GameStop has 5,500 physical locations, employs over 50,000 people, produce $5 billion in annual revenue, and has a current market cap of $14 billion. And the market has the balls to tell US what a good investment is? Come on, Kramer, zero chance in heck that the analysts would debate me in real time and unscripted on the fundamentals of GameStop. The old market is just peeved off that they missed out on something, just like they've been peeved off at Tesla for years. They'll do and say anything to protect their ego. It's not even just about money at this point. They have to prove they were right. GameStop will be sitting at $1,200 and they'll be telling us how it's heading for 12. Right? Just imagine week over week the amount of growth, 900% on the year, 1600% at a point when the gamma squeeze happened back in January, right? If you are looking at the regular market, that's 7% on the year. That's insanity, right? This is a stock that has proved itself already. And if you're wondering about that squeeze calculator, that's another video that we have on the channel. Go check out that calculator that has already proven itself a couple of times already. The volume, season 3, book 3, the volume. Go check out any of your favorite boomer stocks and look at the volume on Friday. I'll bet that most of them have a higher than normal volume showing on Friday due to witching day. Coke, 15 to 20 million. McDonald's, 3 to 4 million. Looking at much higher volume on witching day. This is just how it is. Witching day is more volume, which might lead to more volatility, might not. Wait, what? The GameStop, 50 million on average, 24 million on Friday. And this is something that we watched, we got angry over, and we bonded over on Friday. Now, yes, we realize that there is going to be some outlying companies that don't see an increase in trading volume on quad witching day. But GameStop's volume trended negatively for the day. Not just negative, but almost half of its 50-day and 200-day daily volume averages on quad witching day when ETFs were rebalancing. So you're telling me that on the one day that shorts were impossible to locate to borrow, that trading volume just happened to be half its average on the highest trading volume day of the year. Alrighty then. So this, once again, if it wasn't clear, is highly unlikely. Just like how it's highly unlikely you haven't yet pressed that subscribe button to help up the counter get up to 70,000. That's what we're looking for. So part 4, book 4. One last part, guys, the options. 10,500. That's how many calls finish in the money for the 19th of March. Contracts at $200 on Friday. That's 1 million shares that needs to be delivered by Tuesday. That's today. That's 1.5% of total actual float. I've already explained to everyone how they believe 2 hedgies or 1 hedgie with 2 accounts are trading the same bundle of shares back and forth with each other to artificially inflate volume. Trading 1 million shares for $0, blah, 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 1 cent spread on an off exchange pool costs $100 per 1 million volume. I honestly believe that the daily short volume is closer to 75% of the actual daily open market activity, and the remaining volume is a single hedgie or 2 trading the same shares to themselves at the 4th decimal point on an off exchange to spoof volume and cover up the true short percentages. One of the things that we even covered in Congress was that they asked specifically, hey, can retail investors trade at the the 5th or 6th decimal point? And they were like, no, they can only trade at the 2nd decimal point. So there you go. Pure and simple, exactly how these institutions are able to move their money around at prices that are just pure manipulation and nothing else to do with anything that is supposed to be practical. We should see early this week how an extra 1 million actual shares affects the price. Could be interesting. Someone was trying hard to keep it under $200. It took 1,250,000 in volume in under a minute to keep the price over $200 to close at the bell. This many shares is in under a minute, and the price went straight sideways. That's 1 million shorts hitting the bid side but not being able to drop the price. No one sold 1 million shares in the last 60 seconds when they all have all or of after hours to see where the price goes. Those were all short attacks, the price before the bell. Now there were less than 400,000 shares up for delivery at $200. If the daily volume is truly as high as it being shown to us, 400,000 shares shouldn't even make a blip on the daily chart. So why would someone fight so hard at the close to stop 400,000 shares unless the actual volume is much lower? So I'll leave it to you. We have the 4 pieces of the puzzle, and soon we'll have the 4 Holdeman of the ape apocalypse coming together and actually talking about what the point of everything was this past week. What exactly happened that caused these 4 pieces of fundamental analysis to be entirely off the rails. Many suspicious, many unreasonable, and all illogical. And logic, math, That is the key here. If you guys want to also invest in math and yourself, the subscribe button and the bell button is waiting for you so that you can start, and make sure you don't miss out on a single live stream. We go bell to bell, day by day, every trading day. And that way you guys won't miss out, even if the squeeze happens tomorrow, the day after, the week after, the month after. For now, I want to thank the people that make this show possible. If you guys press that join button and you don't see your faces yet, I update this on a weekly basis. Thank you so much for those of us on Patreon and on pressing that join as a member on YouTube. And for now, for forever, I'll see you in the money.